Welcome back. So, on and off, we hear about asset allocation strategy that you are in this and this age group, then so much percentage to stocks, so much to bonds, so much to gold. As you grow older, then more amount in bonds and less in stocks, so on and so forth. So that's the normal asset allocation strategy. Some percentage to gold, something in real estate. X percentages keep changing. People become financial planners with this type of strategy, and they keep advising. They look at your age profile. They look at your is risk appetite, and then people keep advising time to time. True, when you are 80 plus, then naturally you will not want to take and put money in risky assets. That's the normal thesis on which this entire asset allocation strategy works. However, I still feel that there is a broad bandwidth, like people who are between, let's say, 20 and 50 or 60 years of age, who have a higher risk appetite, even 70, I would say. And these people would love to invest more in equities, as over the long term, equities have been the best or the most preferred asset class with the highest average returns as compared to any other asset class. That's what history has taught us. So we look at a longer duration, stocks are always preferred asset of choice. Now, if you were to go and look in between, people say you cannot, still they keep saying the same thing, you can never time the markets. And those who time or say they can time are bogus. They are just talking in the air. It's like the flip of a coin. So many analogies are used to put people down and to make them feel weak. Even people who try to come 80-85% closer, they're made to look very low. That you can never time. Nobody has, market is a king, nobody has ever timed. Well, even we do try to time. I may have failed a few percentage, maybe 5% of the times. We have a good track record though. And secondly, I don't think it is, you can universally just go by the age group and this asset class. And it's a very complex thing. It is not so simple just to make a formula on age and this, this age, then you put so much in bonds. And for example, now many people are saying you should start putting in ETFs, stock ETFs, various kinds, mid cap, small cap funds. Take it from me, this is not a good time to put money in ETF. And take it from me, this asset allocation strategy is completely wrong. And also take it from me that those who think that you can never time the market, never, that's completely wrong also. True, there is a percentage risk. Naturally, when there are so many variables in the market, you can never say that, hey, everything will be hunky-dory, perfect. That's not how it works. But yet, if you can come 85-90% close, if I can tell you this is where the bottom is, and you come pretty 85-90% close, that's fantastic. So as long as people have their egos running high, I don't have an ego. I do proclaim from time to time that technicals will not help you get to this formula as to how to find the bottom to time the market. I don't think so. But to those who feel that technicals are the only way to do it, hats off. Good luck to them, and I respect them. I respect everyone. You can take any bit of data in the world, whatever it may be. If it can help you time the market, excellent. It may be anything in the sun, under the sun. As we were studying in business school, and there was one open book book exam I never was used to, but then this professor said, you can use any material under the sun. So I asked him, what about under the moon as well? He said, yes. So under the sun and the moon, whatever data is available, use it. But asset allocation strategy that is purely based on age group and some risk appetite, no. It depends on the situation of the market as well. You are in an age group of, let's say, 20 to 60, 65, 70, and you know that there's a bottom, and we will tell you where it is coming. We'll tell you where the situation is going to turn now. People are not even sure. They're not even sure of how the CPI numbers will be on coming Tuesday. And I can bet and tell you, even if the CPI numbers were to be tamed, they still don't know how the Fed will react. That is going to be another story. And then how will be the jobs number? So unless and until I can give you a 6 to 9 months outlook today, where the big falls will be, where the big rises, everything is coming. There's suspense, there's tragedy, there's everything. But don't say this asset allocation strategy blindly follow based on age profile and go and put all the money in ETFs and just go to sleep. No, you can't. This is not the time. This is also not the time to do DCA or dollar cost averaging or rupee cost averaging. It depends on which part of the world you are at this point of time. There may be no magic bullet, but you can come pretty close. You can come very close to it. And that can give you a great competitive advantage in the investing world. Take it from me, it's not just technicals. Pure technicals will not help you. It doesn't work. I've been time and again, I've been trying to explain, even in my teaching assignments, in my webinars, seminars, conferences, that if you are basing your investment decisions on the basis of the same moving averages, the same piece of data which others are also looking at, the same charts, the same support resistance levels, you will never get a competitive advantage. You should have something which is different, which others do not have. Then you will know. And for that, you need to do vast research. We have been spent over 35 years of hard work in research, immense amounts of tons of money, time, energy gone into all this. And yet, if I were to ask somebody to pay me a small fraction of my data cost, they hesitate. You should be glad to pay somebody who put so much time and effort. In fact, he'll give you more in return. But they don't think so. Everything has got a cost, friends, in life. There is nothing for free. If I do not recover my data cost this way, then they do some other things. We have been very honest. We've given you something which others do not. But that has an element of cost. Okay? And we just take a fraction of it. We are so honest to say that. We're giving you a lot in return. We're telling you when the next big fall will come. We're telling you when the things are going to turn so badly. There's going to be a huge fall at some point of time. We'll tell you that. We'll tell you also when the big fast turnaround will be. And some people think that the second half of this year is going to be fantastic all the way to heaven. There also you will get a lot of shocks. Take it from me. Based on the research that we have as of today. So those things that second half and it'll just move in an express train to heaven, vote. Tons of speed breakers. And if you understand what time those speed breakers are coming and in what denomination, you will be able to get a tremendous competitive advantage. But don't follow a blind asset allocation strategy. And to get to know more, please join our Prime Plus Telegram group. That now you can either WhatsApp us on 982-086-1044. Alternatively, you can email us at globalmoneyinvestor@gmail.com. Thanks for watching. Have a great weekend ahead and God bless you all. Take care. Bye.